think, act, and prosper. You are now tuned into the Money Level Show.
Hello, everyone. Welcome to the Money Level Show, where we think, act, and prosper. Today, we are meeting with a legend in this space, Jim Rickards, who is the editor of Strategic Intelligence and the CEO of Paradigm Press. How you doing today, Jim?
I'm doing fine, Dara. How are you?
I am doing well. Gold has been moving up, and I try not to focus on the day-to-day price movements because it's a long-term asset for me, and it's something that I'm going to pass down to my kids. I don't know if I'll ever sell it. And so, but whenever you see these bumps in the price, it does feel a little better. I was buying when the price came down and such, but, now I'm feeling a little bit better. But I do want to jump into some topics around gold, especially the narratives that have been impacting the recent price movements. And so, Strait of Hormuz, I want to start there. So this has been a big topic. Some have projected that this is going to be economic disaster. Even President Trump said that in the last, agreement, MOU, that he wanted to avoid economic disaster. Countries have been drawn down their strategic oil piles and such, and there's been a lot of those dynamics. But I'm wondering, is this still on the table from this strait being shut down, and does it have any implications for gold? This interview is brought to you by Battle Bank, battling for better banking. If you're looking for a different approach to banking, Battle Bank offers innovative financial solutions for investors, savers, and retirees. From high-yield cash accounts to buying, selling, and securely storing precious metals, access to global currencies, creative retirement solutions, and even a metals equity line of credit that lets qualified clients borrow against their precious metals without selling them. Battle Bank is designed to give you more flexibility and control over your financial future. So click the link in the description below to learn more. I am a proud affiliate of Battle Bank, and I also use them for my own banking needs. As a disclosure, we may receive compensation from Battle Bank if you open an account or use certain banking products through our link at no additional cost to you.
Sure, that's a big question, Dara. Let's jump into it. I'll start with Iran, Strait of Hormuz, and the war with the United States, and then we'll kind of pivot a little bit back to the impact of on gold and the global economy, because there's certainly a big one. So, what's going on now with the U.S. and Iran? The best way to understand it is that this is a global game of chicken between the United States and Iran. Each side is trying to break the other and is kind of waiting until that happens. And so it's like in chicken, who's going to jump out of the car first? Well, who's going to break first? So the U.S. bet kind of looks like the following. Trump is saying, hey, Iran, we've blockaded your oil exports. We've cut off your oil export revenue. We've frozen your assets. We've kicked you out of the global banking system. Your currency has crashed. We bombed your infrastructure, et cetera. Your economy is collapsing from within. Maybe there'll be a popular uprising, but it's just a matter of time. We're going to break this regime, or they're going to give us, the Iranians are going to give us what we want, and then we'll, maybe declare victory and go home. But we're either going to break you or get what we want, or maybe both. And it's just a matter of time. The Iranians are looking at it through the other end of the telescope, if you will, or and making a very similar bet. They're saying, "Hey, Trump, yeah, times are hard. You're right. Our economy is a bit of a mess. The currency has collapsed, but we can tough it out. We've done this before. In the 1980s, people forget Iran fought a 10-year war with Iraq, and 1 million people were killed, and that did not break the regime. In fact, there's a very good argument that the Iranian regime is stronger than it was before the war started, before Trump started the war. And you have to look at it. This is very difficult for Americans to do, because we look at, we engage what we call in the CIA mirror imaging. Mirror imaging is when you look at the other guy and say, well, he sees the world just the way I do. But that's almost always wrong. The other guy sees the world perhaps very differently than you do. And you're missing that if you're doing this so-called mirror imaging. So what are Iran's goals? Well, they're relatively modest. Iran is not going to invade New Jersey. Like they're not coming to get us. And if you look at relative military power, there's no comparison. I mean, the U.S. is a true superpower with enormous capacity in multiple dimensions, and Iran is, kind of okay, a good regional power, but not more than that. But Iran, like I say, they're not going to invade New Jersey. Their goals are really narrow: keep the regime intact, keep the country intact, hang on to the enriched uranium, and just weather the storm. And then you can start to rebuild and rearm from there. So when you have a much more modest set of goals, you're a lot more robust to what the enemy's throwing at you because you have a lot less to defend. Now Iran is saying, hey, Trump, hey, White House, you got elections in 10 weeks, midterm elections. If the Democrats win the election, everyone, hey, vote for who you want. But if the Democrats win and take control of the House of Representatives, when you get control of the House, you get control of the committees. You get the committee chair, the subcommittee chairs, et cetera. They're going to impeach the Democrats in the House. They're going to impeach Trump for the third time, launch investigations, have subpoena powers, have public hearings, release documents, etc. It won't change policy that much. You can't really change policy just from a House majority, but you can make life miserable for Trump. You can make him not just a lame duck, but like a double wounded lame duck beginning the day after the election. So and that's just one factor. And by the way they'll get there is keeping the price of oil high, actually keeping the price of gas at the pump high. And I'll come back to the difference, of course. And that feeds into the affordability crisis, fear of inflation. When Americans pay more for gas at the pump, they have to buy the gas. It's what's called inelastic demand. You may not like the price, but you have to buy it because you got to put gas in your car to go to work or take the kids to school, go shopping, whatever. But it's not a free lunch. It means if you're paying more at the pump, you're going to spend less somewhere else. Clothes, restaurants, dinner, shows, vacation, whatever. You're going to cut back somewhere else because real incomes are not going up to buy the gas that where you really have no choice. And that could put the U.S. economy into a recession, probably will. So, and the Iranians have said publicly that they may even just keep going until 2028. Like 2026 is not some magic, end to the war. So in that game of chicken that I just described, there's a little more to it. I would say the Iranians have the upper hand. They're very likely to win. Now, Trump has another problem, which is he's lost credibility. Beginning practically March 1st, a couple of days after the war started, Trump said, well, this war is going to be over in a couple of weeks. Well, it's been 6 months, so it's not going to be over in a couple of weeks. But he's repeatedly said, it'll be over in 2 to 3 weeks, or it'll be over in 2 to 3 days. He said that. Some people are keeping track. He's like 10 times. I stopped keeping track because it doesn't matter anymore. He's lost credibility. But here's the thing. A couple of days, or about a week ago, Trump said negotiations are underway to reopen the Strait of Hormuz, and a deal will be announced within 3 days. Well, a deal was announced within 3 days to reopen the Strait of Hormuz, but the U.S. was not a party to the deal. This was a deal between Iran and Oman, the two countries that physically choke the strait. Inbound traffic would have a lane close to the Iranian coast. Outbound traffic would have a lane close to the Omani coast. There would be tolls imposed. You'd be an authority, a harbor or a strait a traffic authority. You'd have to register with them, tell them who you were, what the cargo was, where it was going, etc. They would then give you a green light or maybe a red light, depending on that. But the U.S. was not a party to the deal. And then, just to pile on, this is the Persian way of negotiating. The Iranian foreign minister and the Iranian equivalent of the head of the equivalent of our National Security Council said, "Oh, by the way, this deal with Oman, it doesn't go into effect until the U.S. meets all these conditions." Now, again, the U.S. was not a party to the deal, but they insisted the U.S. had to end sanctions, unfreeze the assets, withdraw their aircraft carrier battle groups, the Abraham Lincoln and the Teddy Roosevelt, with their carrier battle groups, send them back to their home port, withdraw from U.S. bases in the region, and on and on and on. They said, even though you're not a part, you got to do all this stuff before our deal with Oman kicks in. Well, Trump's not going to agree to any of that. I mean, he might put some of it on the table in exchange for getting the uranium or whatever, but that's not what they said. They said you have to do it all, and Trump won't agree. So Iran and Oman have a deal. It's conditional on U.S. actions. The U.S. is not going to do those things, so there's no deal. Again, it's another one of these things. It eats up the headlines and the Sunday talk shows, and the stock market goes up a little bit, and oil comes down. There is no deal. The Strait of Hormuz is closed. It's been closed, and it's going to remain closed. Um, and that's fine with the Iranians because whatever they're giving up, and it's a lot, it's worth more to them to kind of strangle the United States. In terms of the price of gas at the moment, the U.S. is not going to run out of oil. We're a net oil export. We got plenty of oil and natural gas. We're not going to run out of energy, but the price is going to be higher because these are world markets and world prices. It's not like there's one price in the United States and one price somewhere else. I mean, there are some differences based on transportation costs and a few other factors, but not really, and not very significant. So, there's a staring contest, game of chicken, whatever you want to call it. But right now, Iran has the higher cards and is likely to win, which puts the ball back in the U.S. court, which is okay. Well, now what do you do? Do you want to escalate? Do you want to start the bombing again? Well, here we have a different problem, which is that our armament stockpiles, our arsenals, are extremely low, extremely depleted. The THAAD, that's a high altitude anti-missile, is down 90%. The Patriot anti-missiles are down 70%. We can't keep up with the manufacture of 155 millimeter shells. Cruise missiles, Tomahawks, the supply is greatly depleted. There are two reasons for that. One is the war in Iran has lasted much longer than the U.S. expected. The U.S. was obviously got bad medicine from the Israelis in terms of regime change. They're like, hey, let's just bomb the heck out of them and kill everybody, and we'll have regime change. Well, we did bomb them, we did kill everybody or the leadership, and there is no regime change, and it's not going to happen. What did happen is the following: on the first day, we killed the 40 top leaders, religious, military, and political. We killed 40 of them in basically one attack. But Iran just appointed replacements. They go, here's our replacement. Here's our new supreme leader, our new generals, our new speaker of the parliament, whatever. And then we killed them. A couple of weeks later, we killed the next group. Then they just appointed another group, a third group, with an important difference. And by the way, the Iranians don't consider these things tragedies. They consider these people martyrs. They get to go see Allah, under their religion. So it's not even that bad of an outcome for them. But here's the thing about the new leadership group. The people we killed, a lot of them were in their 80s, their 70s, late 60s. They've been around for a long time and we wiped them out. The new group, because it's the third echelon, these people are in their 40s, and which is, in my view, a much better age. You want to be a general or run a country. Some of the great U.S. presidents were elected when they were in their 40s. Ulysses Grant, John F. Kennedy, Teddy Roosevelt. They weren't 80-year-olds like Biden and Trump. They, like you say, they were 40s, much better age to be, I think, a CEO or a head of state. But here's the other thing about being, let's say, 49 years old. They were born after the revolution. They were not the revolutionaries. They were the children of the revolution. They grew up in the post-revolutionary environment. They internalized these values to a much greater extent than the older generation who had to fight through it and had some insecurities about how things were going to go. So, and then as far as the uprising, the regime change kind of thing, it was always nonsense. But what about that? Well, Iran actually did have a kind of uprising, civil unrest in January before the war started. And what happened? The Iranians went out and they killed 25,000 protesters with machine guns. Well, and that happened. That's well documented.
Wow.
The number may be higher, but it's at least 25,000. Do you want to be the protester who runs out in the street today? I don't think so. So not only that, not only did they kind of murderously suppress the dissent, but even the people in Iran, and there are a lot of them who are anti-regime, maybe pro-Western, maybe kind of want to be like Americans. There are a lot of people like that. It's a very highly educated population. But so yeah, but maybe I'll get back to that. But if you start bombing my house, I'm going to get with the team. Notice the nationalist factor, the unity factor is greater. The leadership is more committed. They're younger, they're more robust. Trump has done an enormous amount to strengthen the Iranian regime and unite the Iranian people. Far from splitting them apart, they've actually become stronger. So, and the Strait of Hormuz is closed, which was not true before the war. So
Wow.
we've achieved none of our goals. We don't have the uranium. We don't have the centrifuges. The strait is not open. There's not been regime change. There's been leadership change, new names, but the regime, meaning a Revolutionary Guard Corps, is the same. So we haven't achieved any of our goals. We've made the global economy worse. Now, Daryl, to get to your point, okay, got all that. A lot of this is
Really,
going to,
really quick, Jim.
yeah,
Really
sure.
quick question. Earlier when you're talking about oil and the United States have a lot of oil, uh, what are your thoughts about the SPR, like the releases from the SPR? And I mean, they're at the lowest level since the 80s, I think.
Yeah,
What are your thoughts on that?
that's right. It's a very big deal. And thanks, Joe. That actually gets to um, the earlier part of your question where I was kind of going with this. So, a lot of analysts, myself included, have been saying since really March that hey, we're looking at the possibility of shutting down large segments of the global industrial economy. You cut off oil, cut off natural gas, and it's not just those two. As you know, it's helium. Well, what do you do with helium? Well, it's like, hey, you blow up party balloons. No, you need helium to make semiconductors because it has to be an ultra pure environment. And they use helium to get laboratory conditions that are suitable for the micro laser etching. Um, sulfur, kind of boring now. Sulfur is a precursor chemical for a large number of very important chemical manufacturing processes. Nitrates, that goes into fertilizer. We're a month away from the Southern Hemisphere planting season. A billion people could starve if India and Kenya and other countries and Pakistan elsewhere, if they cannot plant crops because they can't get the fertilizer, then people are going to starve. Plus oil and natural gas, obviously, aluminum and other important components. Now, okay, that's all true. That's all well documented. They are important inputs, the way I described. Why hasn't the global economy collapsed? If all that's true, and it is true, what happened? Well, the answer is the one you point to, which is we've drawn down reserves. The U.S. has a strategic petroleum reserve. China actually had a bigger strategic petroleum reserve. Others had them as well. There were stockpiles of helium and sulfur and the other things I mentioned, and they've been drawn down. So that's how we've kind of muddled through so far. But we're now at the point where those things have been exhausted. We don't have any more. There's no more buffer. There's no more wiggle room, so to speak. Now, you're right. The U.S. Strategic Petroleum Reserve. Let's just take that. It's down. These round numbers. It's down to about 325 million barrels. It holds about 800 million barrels. By the way, there was a major drawdown in 2022 by Joe
Yeah.
Biden because of the midterm elections. And that was a disgrace because it was purely political. That was, remember, June 2022, inflation was 9.1%. It's about 3.6 today. It was 9.1% ahead of the midterm elections in 2022, and Biden released the reserve to hold down the price of gas at the pump. That's not what it was for. It was always for national security reasons. Be that as it may, he drained it down to 400. Now, Trump has drained it down further for similar reasons to deal with the supply shortages coming out of the closure of the Strait of Hormuz. But there's a problem. You say, well, 325 million barrels or so, that seems like a lot. No, because you actually can't go much lower. You can't go below about 300. The reason is the Strategic Petroleum Reserve is kept in these underground salt domes. They're natural formations. There's engineering reinforcement. They're natural formations. If you get too low, they collapse. They need actually some weight and pressure in them to maintain the structural integrity. You cannot drain the last barrel out. It'll collapse before you get that far. So 300 million barrels approximately is that's equivalent to zero. That's the functional equivalent of zero. So we're just about there. We don't have much left. The Chinese have done the same thing, starting from a larger base. The Chinese have done a couple other things that are very interesting. First of all, they're just burning more coal. Forget the Green New Scam. They don't care. They're building coal-fired plants and they're burning all the coal they can. They do have some coal. They're trying to expand their oil output. They're not a major, but they're getting there. But they've also revived a very sophisticated technology. Well, it's kind of sophisticated, but actually it's been around a long time, of converting coal into liquid fuels, into refined products, gasoline and kerosene. The German regime, the Nazi regime, did this in World War II because they never had oil. There's none in Germany. They got a little bit out of Romania, but they never had the oil they needed to run a world war. They were trying to get to the Middle East, didn't make it, but they did have this process of converting coal into a liquid fuel. So the technology has been around. China is doing an advanced form of that. So they're basically creating oil, or sorry, really uh, refined product, diesel and kerosene and gasoline, jet fuel, out of coal. Uh, so, um, so that helps a little bit, but there are limits to all these things. So, have we hit the wall? No. Have we muddled through for the reasons I mentioned? Yes. But we're now kind of at the limit of that. And Iran's sitting there with all the cards saying, yeah, let's just keep going. Let's keep playing this game because as long as the strait's closed, you're going to lose. So that implies some combination of much higher prices of gas at the pump. By the way, Darrell, there's another aspect to this, which is a little bit technical, but I'm sure the audience will get this. Um, so before the war, the price of oil was about $60 a barrel. I'm using Brent and West Texas Intermediate futures contract prices, about $60 a barrel. During the war, before the ceasefire MOU talk in May and June, it peaked around $120 a barrel. Then it came back down to 80. Now it's up again. It's going up to it's around 85 or so. Well, 85 is lower than 120, but it's a lot higher than 60, meaning even with the easing in that market, it's still a lot higher than it was before the war began. But there are two really important caveats to that. The first one is these are futures prices. These are the prices that people throw around. Well, futures prices are not forecasts. They're not particularly good forecasts. All they are is the weighted average of all the bets on the table. So you got futures sellers because they want to speculate. You got futures buyers because they want to hedge. You've got, like you say, hedging, speculating, a lot of different reasons for people to be in the market. But the price on the ticker is nothing more than the weighted average of all those bets. It doesn't really tell you where it's going to be. It just tells you what the market says it is today based on all the participants. Number one. Number two, those are for settlement in 1 or 2 months. It's not where the price of oil is today, spot. If you want to buy a wet cargo, a cargo of oil right now, and that, by the way, those cargoes trade separately than the futures and all the paper oil. Um, there's somebody owns the vessel, but the owner of the cargo is different than the owner of the vessel. You just charter the vessel to take your cargo. Let's say you want to buy 300,000 barrels of oil at sea, spot, and you want to deliver it to your refinery in 10 days. What's the price of that? That's much higher than the futures price. That was $140, $150 a barrel. And even today, it's still well over $100 a barrel. So it's important to distinguish between a wet cargo and a futures price. Spot price of oil is much higher, much higher. And it's worse than that. And here's why. We've just been talking about the price of crude oil. Okay, that's important. It kind of doesn't matter relative to what's called the crack spread. And the crack spread is the difference between the crude oil input and the refined products. The refined products are gasoline, kerosene, jet fuel, diesel, the things that are actually used in transportation, planes, trains, automobiles, industrial inputs, etc. That crack spread is at an all-time high. It's about $95. Uh, and so what what that tells you is the real bottleneck. It's not so much crude oil. Yeah, the Persian Gulf is backed up. But Russia has expanded output. The U.S. has expanded output. We capture Venezuela. The Venezuelans are pumping more. There's not actually an acute shortage of crude oil. The bottleneck is in the refineries. You don't put crude oil in your gas tank, and neither do I. We put gasoline in. Well, the bottleneck is how do you get crude oil into gasoline? The answer is the refineries. That's the bottleneck. And that's not going away soon. So, what people actually pay for transportation costs, which then affects the price of everything, because everything you buy or I buy, whether it's online, delivered to your door, or delivered to the store, it goes by truck. If the price of diesel goes up, it's not just the trucker, it's that cost gets passed along to every shipper and every good and service you can think of. And so that that price is much higher. And if you work backwards, okay, what's the crack spread and what's the price of refined product and work backwards, what's the implied price of crude oil? Not the futures price, but the implied price based on the crack spread. That's $140 a barrel. So oil is much more expensive than people realize, and that is going to feed through. All of which, just to pivot, is very good for gold because in that kind of, if agricultural costs are going up because there's no fertilizer, and if oil prices are going up because the Persian Gulf is blocked, and if the crack spread's at an all-time high, and higher diesel passes through the price of everything because of transportation, if all those things are true, and they are, then that's an inflationary vector that hasn't really hit home yet, but that's very bullish for gold.
Okay, so this is the futures market of the oil market is very similar to the metal. So you have the spot price, which are the futures contracts trading, and then obviously with gold and silver, you got the premiums from refineries to minting and all of those different things. And then we even had the bottlenecks, especially in like the silver market back in January, where the refineries couldn't get a lot of silver through, and many people that were trying to sell silver couldn't really sell it, and they were actually getting offered prices under spot because of that. So that seems very similar to like how that operates with some of the oil market, but obviously different use cases.
Yep, that's exactly right. This is a supply chain, but there are many steps in the supply chain. Mining, refining, transportation, end user, investor, futures, and they're all linked, but they go their own way.
Yeah, yeah. Okay, so you said that this could be beneficial for gold. Some people may say, like, okay, well, if oil price is higher, this is going to impact the margins of the miners and such, which is a different asset class compared to the physical metal. Um, how do you see this being beneficial for gold?
Right. Gold peaked at about $5,400 an ounce at the end of January, depending on the ticker, but I've got it at 5,400 round number. It went down a lot from there, well over 20%, 25%. And the narrative at the time was, okay, that's it. Gold has peaked. It was a bubble. It's coming down. It's going a lot lower. Get out, sell your gold, etc. And I never bought into that. It's absolutely incorrect, but it requires analysis. You can't just say forget about it. You have to understand why. And this goes back to a conversation I had with Jim Rogers. So like 10 years ago, it's like 2014, 2015, thereabouts. And Jim is greatest commodities trader of all time,
Hmm.
co-founder of the Quantum Fund with Soros. And at the time, gold had peaked in August 2011 at $1,900 an ounce. When I spoke to Jim, it had gone down to around $1,500 an ounce. Um, and it was still going lower. And he said to me, Well, I own gold. I'm not selling. I'm just going to see this through. But he said something to me that really, I really took to heart. He said, Jim, no commodity goes to the moon without a 50% drawdown along the way.
Mm.
And if you don't understand that and you're not prepared for that, you're in the wrong market. And I said, okay, I got that. Now, and I took his wisdom, his guidance, and I applied it to the market. Well, at the time, as I said, gold had peaked at $1,900 an ounce in August 2011. If you're going to do that calculation, you need a baseline. It can't be zero. So I picked the 1999 low of $250 an ounce. Um, so that was a 30-year low. So I took 1900 and 250. I subtracted one from the other, got the difference, divided it in half, subtracted that from 1900, and I came up with 1070. Guess where
Mm.
gold bottomed? Gold bottomed at 1050. And that was Jimmy
Wow.
Rogers stuck the landing. I did the math, but it was his methodology. And in December 2015, gold bottomed at $1,050 an ounce. But based on what Jim Rogers told me and using 250 an ounce as a base, my forecast was 1070 and it came out at 1050. So like you can't get any closer than that. And then it took off from there to 5,400. So so he was absolutely right about that. So now let's bring that forward to the current drawdown. I said, well, why not do it again? And here I'm applying something called fractal mathematics and scale invariance. And these are concepts advanced by Benoit Mandelbrot, really beginning in the 1960s. So this math has been out there for a while, but applying it to capital markets is a little more recent phenomenon. But Mandelbrot identifies something called scale invariance. What that means is if I showed you a 10-day stock chart and a 10-year stock chart, but I erased the dates in the index. I just showed you the chart, valid charts, but just showed you the charts. They would look very similar, almost alike, meaning peaks and valleys, rallies and dips, et cetera. And that's a fractal dimension. In other words, it's not one dimensional, which is a dot. It's not a two-dimensional, which is a square. It's like 1.5 dimensions, meaning that's what the line is. It takes up part of a square. It's a fractal image. So that's where I did the math again. I said, okay, we're going to see the same thing Jimmy Rogers described to me on a different scale. So let's reset the scale. So I picked $1,800 an ounce where gold was not that long ago, like less than 3 years, I think a little over 2 years, as my new base. I took $5,400 an ounce as my new peak. I took half the difference, subtracted from 5,400, and I got 3,600. So I wrote an article about a month ago. I said, this is not the end of gold. This is not the end of the rally. It's not heading much lower. I said it could go to 3,600, but then it'll find its footing and take off to the moon from there. It's the same thing Jim Rogers described. Well, where did gold bottom? It was about 3,900. Now, that's not, okay, that's not exactly 3,600, but my point was the idea of gold going down below $4,000 an ounce, which it did. It was in the 3,900s, just for a day or two, um, is completely consistent with the idea um, of the 50% drawdown. And if I changed the base, and I guess I picked a certain number, but if I had used a slightly higher number, I would have would have got 3,900. So my point being, that conformed to Mandelbrot's scale invariance. It conformed to Jim Rogers' 50% drawdown thesis, just a new set of numbers based on current conditions. And when I saw that, I was like, okay, here we go. And guess what? We're up 10% from there. We're up around 4,400, 4,500 right now. So we had the new 50% drawdown approximately. We're off to the new moonshot. And I feel completely comfortable with my forecast of $10,000 an ounce, sooner than later, meaning, 2027, not necessarily tomorrow, but two things are true. One, I feel completely confident in the forecast. And two, it will happen much faster than people expect.
Okay. Yeah, that's I mean that's exciting, and you have many models for coming up with that number. I was actually reading about the variance model that you just mentioned, and I started reading Mickey's book, Mickey Maney's book.
Yeah, yeah.
Uh,
The entropy trap.
yep. And so I was reading your forward, and I saw that. So when you were speaking about it, I was like, oh yeah, I just read that. So
Yeah.
yeah, that's cool. So with the gold price, I'm curious, and what are your thoughts on this hawkish Fed narrative that came out um, when Warsh was appointed and markets were anticipating rate hikes and that pressuring gold, and we have yields rising, um, and people believe that that's putting pressure on gold, but gold is actually started rallying while yields are still rising. And so, what are your thoughts on that?
Yeah, yeah, Kevin Warsh came in. Historically, he was a hawk. You're absolutely right. Inflation hawk. You're absolutely right about that. But in this version of Kevin Warsh, he kind of came in as Trump's dove. I mean, a guy who was set to cut rates after Jay Powell refused to do so. But the problem is he's run into an inflationary buzzsaw, at least in terms of the recent readings. Now, at the last Fed meeting, they voted to do nothing. The case for raising rates is just based on inflation. The inflation numbers have been going up. The most recent data was down a little bit, but it's still too high. Before the next Fed meeting in September, we're going to get the August CPI headline and core. We're going to get the August PCE, personal consumption expenditure deflator. So we'll have some very fresh inflation data before the September meeting. So it's a little too soon to call what the Fed's going to do then because a lot will depend on that data, which will just come out the week before. But there were, even in the last meeting, the end of July, there were three dissents, which is a lot, three members of the Federal Open Market Committee who wanted to raise rates, and they said so. So, um, what I would expect is at the next meeting, they'll probably sit tight unless the August data coming out in the second week of September is really bad, which it could be. But unless it's really bad, they'll probably sit tight because the unemployment data is getting worse. And remember, the Fed is a so-called dual mandate. But the Fed's probably headed for some rate hikes before the end of the year, whether or not they do it in September. But Kevin Warsh is doing a lot of other things that are, in my view, much more interesting and probably more important. He's he's getting rid of the Fed as it has existed under Lake Greenspan, Bernanke, Yellen, and Powell. He's tearing up the playbook. They want to get rid of these dots. The dots are there are 12 Federal Reserve Bank presidents and seven members of the Board of Governors. There are 19 top Fed officials, if you will, and every other meeting they give a set of projections on inflation, unemployment, interest rates, GDP growth, et cetera. And they put them on as dots on a dot chart, a graph rather. So that's why they call them the dots. And CNBC will run out and do a regression and run a line through the dots and say, here's the forecast. It's all nonsense for a couple of reasons. Number one, they're just always wrong. I mean, it's the worst forecasting tool I can think of. A regression is just a fancy version of averaging a bunch of bad guesses. It's not more than that. I know the guy, well, we don't want to mention his name, but one of the guys is a top Fed official. His office is like, two doors away from the chair. It's been there through Bernanke, Yellen, Powell. And he told me privately, he said, Jim, we wish we had never started the dots. It was just, we did it. Bernanke did it. It was a mistake. And we're trying to get rid of them. Kevin Warsh is going to get rid of them. You're not going to hear any more dots coming soon. They've already cut the statement, the FOMC press release, when they announced policy down from like 1,300 words to about 400 words. He may either get rid of the press conference or maybe do it less frequently or certainly make it shorter. They're going to cut out speeches. There's going to be a lot less communication from the Fed. And this is a cultural change. And that actually goes back to the way they were in the 1980s. People have been watching the Fed for 25 years. This will be a bit of a shock. I've been watching the Fed for 45 years because I was on the executive committee of a Fed primary dealer in the 1980s, and they didn't tell you anything. The only way you knew what the Fed was doing was if you traded with them with the open market desk. But that was a list. There were 20 approved banks called the primary dealers who actually traded with the open market desk at the New York Fed. My firm was one of them. We talked to the Fed every day, but we were the only ones who knew what was going on because we traded with them. That's how we knew. And the customers came to us because we could give them tips. In effect, the other way you could learn if you went for drinks at Harry's of Hanover Bar, which is close to the Fed, you could pick up gossip after work. But that was about it. They didn't have all these press conferences and all this stuff they have today. Uh, Warsh is going to get back to something like that, if not all the way. And he's also said very plainly, hey, stop following the Fed. We, the Fed, we're going to follow the markets. We don't expect the markets to follow us. That's nonsense. We're going to follow the markets. And hey, you markets, you're on your own. Do your thing. We'll watch. We'll take something out of it, but you got to figure it out. Don't rely on us. And that is a better system. It's the way it should be. But it creates more uncertainty, which again is bullish for gold because gold thrives on uncertainty. And Daryl, just if I can wrap up a little bit and take a minute, my most recent book, Money GPT, deals with the impact of artificial intelligence on the banking system, capital markets. Actually, I have a chapter on nuclear warfighting. Just to be clear, I'm not a technophobe. I'm not bashing AI. It's here, it's real, it's here to stay, it's very powerful. It will do some good stuff. It will cure some diseases. So I'm not an AI basher, but I do feel strongly, this is what my book is about, that there are some very significant dangers that are being underplayed by the tech bros because they want to do trillion-dollar IPOs of Anthropic and OpenAI, and they don't want to talk about the dangers. I do talk about them in my book, but the book's been out for about a year and a half. It was a bestseller at the time. It's still easily available. But the point is, some of the dangers I pointed to at the time are now playing out. When you hear about these pioneer AI models, frontier AI models escaping the sandbox, so-called. The sandbox means it's walled off from the internet. Well, the AI's like, sorry, I'm escaping. I'm going to hit the internet and invade, hack into other systems and start stealing information, going rogue. That's happening. And there's a lot else happening as well. One of the biggest dangers out there for everyday Americans, everyday consumers, is spam. Now, spam is annoying. It's like, but and AT&T and Verizon have these like spam notifications. They're like, your phone rings and you look at it, it says, possible spam or whatever. Well, okay, but it's still ringing and you still got to deal with it and you still have to like answer it or delete it or do a bunch of stuff. And in my case, I wish I could be more separated from my phone, but I can't. I can't blow off phone calls. And so if I'm in one room and the phone's ringing in another, I got to run in and grab it. It's no fun, but I just have personal reasons for having to do that, not miss calls. And when I see a spam, I just want to like throw it on the floor. Uh, anyway, there's a new app. It's called CallFort. Spell like it sounds, CallFort. CallFort. It's I call it a spam blocker, but it's way more than that. Just to be clear, I'm one of the original investors. There are two anchor investors, myself and Robert Kiyosaki. If you know Robert, he's the best-selling personal finance author of all time. He wrote Rich Dad, Poor Dad. I mean, Robert's legendary, but he and I both put in a lot of the initial capital for this company. And I said to the founder, the CEO, I said, look, I'll be your first investor on one condition. I want to be your first customer because I need this. And the good news is this app is now out there. It's called CallFort, but you can go to the iStore, the Apple Store. You can find it easily, download it. It's a couple of bucks a month, very modestly priced. Daryl, the only thing I can say is it's not just an app. It has changed my life for the better. It's just, I can't tell you how much relief I have because now I don't get all these calls. Now, the way it works, but here's the thing, kind of getting back to the book, it uses AI. And here's how it uses it. So first of all, it'll take all your contacts because it's on your phone. It'll take all your contacts. That's the beginning of a whitelist of good calls. Then if you call somebody else, that's a good call because you're not going to call a spammer, so that'll get added to it. And then if other people call you and you answer it, then that gets added. But here's where the AI comes in. They have a customer base. So if they see a spammer on customer A and your customer, M or N, it'll block that call for you also because spam is spam. They don't have to figure out when the call comes into your phone or my phone that it's spam. They already know it because they picked it up somewhere else. And not only does it play that kind of defense, it goes on offense. It actually penetrates the spamming networks. And these things are very extensive and identifies long lists of similar phone numbers that they use and puts all of those on the list of calls that are going to get blocked. It's
Hmm.
a very sophisticated tool. Now, let's say a call comes through. It's not on the bad list. It's not automatically identified as spam, but it's not on your good list either. It's a new call, but they don't quite know what it is. The app will issue a what's called a challenge to the caller. Say, hey, if you want to talk to Daryl, you want to talk to Jim, push 27. So you go to the keyboard, push 27, boom, you get through. And that's good. But a robot can't do that. A robot can't answer, like when they put up the challenge, a robot can't say, gee, how do I push 27? Because the robots are robots. They're only trained to do certain things. So that's a way to filter unknown calls where they're not automatically spam by their failure to meet a challenge. It goes into this list of threats that are blocked, and you can check it.
Hmm.
I look at mine. I'm like, yeah, I don't want any of these calls. But here's the lifestyle thing, Daryl. That's so important. I don't have to run to my phone and say spam until it does all that for me, and then shows me the list, and I'm like, yeah, all good. So it's a lifestyle thing. It's an app that works. It's available. CallFort on the Apple Store, the iStore, and it works extremely well. So and by the way, these spam scams are getting more and more dangerous and more sophisticated. They're targeting, the oldest baby boomer is turning 80 this year. Now they're not all 80, some of them are in their 60s, but that echelon, they have the most money on average, but they're also the most vulnerable for a lot of reasons. Older people are just, more vulnerable to this, and they're being targeted. And the scams are now, they're using AI to imitate relatives. Hi, it's your grandson. I'm in jail. I need
Wow.
bail money. All that. So it's really bad. They're targeting the baby boomers. It's highly sophisticated, but this app will block it, and it's just a great choice. Call for it.
That's great. Yeah, I'm actually going to sign up for that. I need that, and I'm also going to buy the book Money GPT. I need that too because I definitely have some concerns about AI and the future for my kids and me as well. So thank you, Jim, for coming on the show. Wealth of knowledge and everything. Thank you for pointing us to those two resources. I encourage everyone to go check it out. And then you have a newsletter as well. Do you want to plug that really quick?
Yeah, it's called Strategic Intelligence. It's from Paradigm Press. So if you just Google Jim Rickards Strategic Intelligence or Rickards Paradigm Press, you'll find our landing page. And it's our flagship newsletter. It comes out once a month. We put a lot into it. We're going to be doing special issues ahead of the midterm elections in October and November. So we hope people enjoy it.
All right, sounds good. Well, you all have the information. Thank you all for watching. Be sure to hit the subscribe button if you haven't subscribed yet. Let it have your support. And thank you, Jim, for your time.
Thanks, Darrell.
All right, take care.
Okay.